The last supplementary question will be asked by the Honorable W.M. Thring.
Thank you, Honorable Speaker. Mr. President, the primary function of the South African Reserve Bank in terms of Section 224 of the Constitution is to protect the value of the rand in the interest of the balanced and sustainable economic growth in the Republic, where the instrument used to control the economy is inflation targeting through its monetary policy. Now, there are those who would argue that inflation targeting has become a blunt tool, which largely impacts the poor and the middle class, particularly when the repo rate is increased. Within the South African context, low inflation correlates to low economic growth. Now, Mr. President, with countries such as Egypt, Ghana, Kenya, Nigeria, and Zambia having higher inflation targets with higher growth rates, would you agree, Mr. President, that the Reserve Bank should also have economic growth, employment, and investment targets together with an inflation target? If yes, when would this be implemented? If not, why not? Thank you.
Thank you, Honorable Member. The President.
The approach that the central bank has used, which is also supported widely in our country, is that of curbing inflation. Because a higher rate of inflation, in the end, has a negative impact on the poor, because the value of their currency, the value of the money they have, also goes down and therefore impoverishes them even more. And that is why the drafters of our Constitution felt that we need to focus attention on the value of our currency. And indeed, many other central banks around the world also focus on the value of their currency, because the value of the currency is important in the hands, it's an important instrument in the hands of ordinary people, particularly the poor. The higher the inflation rate, the lesser they are able to purchase in the form of goods and services with their currency. So in the end, economic policy is the whole process and act of balancing. You've got to balance a number of things, and in this regard, we have focused on the value of the currency so that that value of the currency is able to promote, yes, economic growth. When inflation is at the level where it is now, and interest rates are high indeed, the balance goes out of kilter because it prevents investors from investing in our economy. And we hope and trust that this is a momentary process, and this will pass, and we will see higher levels of growth and a lower inflation, and therefore lower interest rates as we proceed forward. Thank you, Honorable Speaker.